All right, gang, welcome to another video where we will be dissecting the top ops of August 2023. So last week, as always, I tweeted out what I thought those ops were. And so overall, I actually felt that August was less opportunistic than July. July, despite having nothing crazy like in March with the banking crisis, I do feel like was probably the best normal month of the year. August I felt was pretty normal with a couple special ops, VFS in particular, and maybe even AMC Ape being the other really big one. I want to focus a chunk of this video on VFS as well as AMC Ape, so I might go quick on some of the ops I've already hit elsewhere, but if there's any questions on those, just comment and I'll address them. So the first op I want to dive into is Nikola on August 1st. I don't really view this to be some huge big op at all, but I do view this to be a very easy layup, which in my opinion, those are probably just as, if not more important than the home runs for most viewers watching this. And for those closely following at home, Nikola tends to be a really in-play ticker. It has a squeeze potential, it's hyper volatile, it tends to really run. And so pre-market at 8 a.m. on August 1st, there was a headline about a California grant for hydrogen stations. We initially have a little pop, but then we curl higher. And so I actually love how tight we consolidated pre-market on that intraday chart. And to make this even better, 295 is actually the same intraday resistance, is also resistance on the daily chart highs from the prior move a week ago. So that makes this a really interesting setup on both the intraday and the daily, breaking out of both those. And so I love plays where more than one time frame aligns. And so best of all, given this tight consolidation, you can literally just risk a penny or two on the break, giving this trade some huge asymmetry. Again, it isn't about whether this headline is meaningless or dumb. For me, I try to let things be somewhat binary in that it's news. I'm not going to judge it too much, especially if the trend's going one way. I want to tend to be with it. So we're curling higher, volume's really starting to come in, and the charts are all telling me this is a long, so I want to be with that trend. So this does end up just barely shaking you out in the middle of the move, but otherwise you come really close to catching that epic up move using my traditional trailing stop of prior bar lows. And what I'd also say is, much like with LYV the prior month, say you're skeptical of this news for whatever reason and you think it is BSE. Well, after that huge capitulation to the upside, once we turn to the right side of the V, there's nothing wrong with getting short that break of prior bar lows either. So overall, yeah, this isn't really a home run, but I would say this is just a very textbook break of resistance on an in-play ticker with the news catalyst that has the daily chart and the intraday chart lining up. It's also super liquid, very defined risk, so I would definitely view this as a nice little single. The next play is going to be Nikola on August 4th, and this play I detailed on Twitter and TikTok, so if you haven't seen that yet, please check that out. I don't have too much to add other than that I love the so-called bouncy ball pattern. Another trader on Twitter actually found a great setup the other day. I think it was in mRNA that he used this in. But again, the keys here with this are that we have a news catalyst that day. We have a very clean level with a very nice long consolidation. Then we break that level. And for those who haven't seen my video on avoiding no man's land, that's under the S&P Capital channel, and it's highly relevant to waiting for that true break of that level around 278 or so. I otherwise want to avoid shorting ahead of that. And so what this really ends up is just a very simple, basic technical pattern. In-play stock, news catalyst, really great consolidation. I already dissected this on TikTok, so I really want to save most of the coverage for VFS and other stuff. VTGN, I don't think this was some huge op either, but I really wanted to just highlight it quickly for rip prevention. I did another TikTok video on this about how to avoid getting ripped on the front side and how I would view this trade, so please check that out. Overall, this stock just had way too many dangerous characteristics to be shorting size in this or to be fighting the trend. Between the news catalyst, the low float, how liquid it is, how the price is just totally broken at that point, if we can't control our risk, we do not need to be involved at all. So again, I don't expect any big chops. I don't even know anyone that really crushed this short or even the long, but it's really important that if things are getting dangerous, we don't need to be involved. This really was for experienced, really great traders only, and even then, minimal size. Nothing wrong with staying away. You know, this was a danger Will Robinson, big time danger, and that is okay. All right, one thing I do want to dive into pretty deeply is the AMC Ape. This is a fairly complex trade, but I actually think this was maybe the best or the second best opportunity of the month. The AMC Ape saga is a long one, and it finally came to its end. For those of you who are not familiar, I highly recommend you check out this video by Igor Appleboom on YouTube. He does a really great background on this, as well as dissecting the trading ops on these. I will link this as well in a PDF if I can figure out how to do all this, God knows. But the gist of it is that back in July, the judge ruled against a settlement that would convert AMC into Ape. We had dissected that play on the top ops. However, the judge left the door open for the terms to be tweaked. And so, of course, given the incentives, the terms were tweaked, and on August 11th, it was announced that the court approved the conversion. So first things first, it's worth noting that it is not coincidental to me that this decision came out again on a Friday after hours. After the July court decision was released then, if I am a serious intraday trader, my ass would still have been on my seat every Friday after hours until this thing came out. That headline is a massive, massive short opportunity for AMC and long opportunity for Ape. This is essentially the opposite of that July play that we covered, and particularly because these tickers are so incredibly liquid, using my traditional stop of prior bar highs on AMC, this ends up being a huge chop if you're in your seat able to get quick prints on this one. And so with that decision out, AMC later announces that pending any changes, they foresee the conversion taking place on August 25th. At this point, there's still a pretty massive spread between AMC and Ape. For those who don't know how to chart spreads, Thinkorswim is free charting software, and they do a pretty great job of charting spreads. You can just simply type AMC minus Ape into the ticker window. This is a really useful thing to know, and this is how I know a lot of traders were kind of like monitoring that spread and being aware of what it should be, especially if on August 25th, if that becomes 1, that should become 0, right? So why does that even exist? So first of all, you've got the cost of borrow, you've got squeeze risk and being forced to cover due to that borrow. Especially you're taking the risk should the judge accept an appeal. This trade might not close on August 25th and the spread could stay really big. And that's kind of why there's as much meat on the bone as there is. So what ends up happening? Boom, on August 21st, the judge comes out and rejects the appeal, which is essentially now means game over for this saga. Pending some crazy Hail Mary apocalypse, AMC and Ape will be converging August 25th, and that means game on for this ARB. So this is where you can put a big ARB trade super safely on if you're a swing trader. The only issue is stock borrow and paying that out each day. This actually brings me to a really interesting dynamic to point out. I'm not sure if everyone necessarily noticed, but you'll notice that in the final days of AMC, each morning it would kind of just melt off the open or start to trickle down even pre-market. Why is that? In my opinion, that's because all the people that don't want to pay that borrow each night, they're kind of reestablishing intraday to avoid that overnight borrow. So whether you're an intraday news trader or a swing trader, finally able to capture that conversion arb, AMC Ape was just a really, really liquid, scalable op, making very, very large moves. And so that's why I think this was really one of the top ops. But again, if you're not familiar, watch that Igor video. It really, really dives into this. Even if you didn't trade this, there's so much to learn from this saga, just on market structure, on news, on courts. It's really, really interesting to follow this stuff. So highly recommend that video. One other op that I'll discuss, SPGC. It's another ticker I would group under the not a home run, but a fairly simple layup, a little bit of a single. And so SPGC is another kind of bullshitty low float IPO. Just off the opening drive, it goes from 4 to 10, which is going to put it on my radar, that alone, because people often ask, hey, why are you watching these tickers? That's a big move. You know, if something goes from 4 to 10, I definitely want to be watching that, especially if it's an IPO. And so we consolidate all day and start to probe highs. But the issue is midday, the volume is actually total crap. And so what ends up happening is we might pierce it by a little bit, but that resistance at the highs of around 11 ends up holding. We then pull back even less, consolidate another hour or two even tighter, then we start to have really, really huge volume coming in. That volume increase is the real tell in my opinion. And so buying that break of highs and using prior bar lows as a stop, as usual, is just another textbook technical play. Again, it needs to be though on an in-play ticker, and boy does this one explode. Volume really comes in and squeezes this thing, with prior bar lows being a very effective stop. So there's nothing so crazy to dissect on this one. It's kind of just a nice technical setup. No home run given the liquidity of it all. But I wasn't even sure whether to include this, but why not? It's just a simple layup for people that are looking for the easier, slower trades. Then I will touch on the Bitcoin Grayscale ETF headline on August 29th. This I decided to include even though I don't really think it was so crazy an opportunity. Mostly I wanted to talk about this for game planning purposes. If you are a serious intraday trader, you really need to know that this court decision was coming. We have so many incredible Bitcoin headlines already this year. As a result, you need to have a detailed game plan for how you want to trade this headline. Do you trade GBTC because it's at a discount to NAV? Do you go for BITO? Do you go for coin? How much do you risk? Is the upside better or is the downside better? Which tickers offer the most liquidity versus the largest expected price move? Do you have buying power constraints that might make liquidity less important and price move magnitude more important, or vice versa? In actuality, trading this release ended up a little bit difficult because it spiked up a fair amount pretty quickly. But given how huge this headline was going to be for the industry, it isn't so crazy to chase when you can use a prior bar low stop. You don't end up crushing it or anything like that, and I didn't see any decent setups later on. But point is, you need to be prepared for this stuff just in case you can get that headline early, or at least not be offsides for when these happen. This headline definitely met what I would call the CNBC heuristic. I'm going to talk about that a little bit later on, and then probably end up doing a private video on that. So I'll touch on that a little bit more, but that's also what made this headline so big and interesting. Another crazy move was ICCT on 8-30. Sorry if you all can hear sirens in the background. This is just further proof that I'm living in Chicago. I think just a fire truck, don't worry. All participants in this video are still safe. So ICCT, another crazy move on August 30. And so this was very similar to COSM in that there is a reverse split that seemingly went awry at certain brokers. And so I did a very detailed video on COSM, which is still hosted on Vimeo for reference. I'm going to also link that in my attempt at making an accompanying PDF. So I don't think one necessarily needs to catch the ICCT long, which I think was pretty hard to do for size. But there is also a really nice after hours breakout. And most important with all this is just that you don't get ripped shorting this thing by not knowing what's going on or not recognizing that COSM is the best analog for this, and that the price can really break and go anywhere on these lower floats. Much like the VTGN video, if you are going to touch it, you really need that mega capitulation and to then always wait for the right side of the V on something as dangerous as this. So again, sometimes it's not just about the wins, it's about avoiding the losses. You really need to be cognizant of this, avoid this. Like the VTGN and this ICCT, above all else, you just don't want to have a month ruiner or a career ruiner in these. Always play it smart, always have a stop, always just listen to the chart. Either of those could have been widow makers. Next, I'm going to touch on Rite Aid. So this was a breaking news headline that they were said to be preparing for bankruptcy. Huge short opportunity in a liquid name if you can get the prints early. This headline is essentially the death knell for most companies, and these tend to trade sub $1 from here. Yes, there were some concerns like could this squeeze like a Yell or something like that. With this, I'd argue that this is actually a real large, actively traded and arbed company with a massive float. So the odds of this stock doing something wonky, in my opinion, especially right in response to this headline, were very low. But if so, that's why we always trade with a stop in a system. So on the initial short, I'm just giving it to the unaffected price. If we start to trade higher, I'm out. This also does a nice roll to lows, and given the meat's still on the bone given this headline, I think that circled roll to lows is a solid later entry using prior bar highs as the stop, which works out pretty well there. The later move never consolidated or set it up cleanly enough for me to want to try to catch it. And I think the point is we just need to be okay letting that grind lower without us. At least for me in my system, that's totally fine. I really don't tend to capture those later moves. That's okay. So MSOS is another ticker I want to really go a little bit deeper on from a few perspectives. So first, big picture, these weed stocks are really, really beaten down. In the total gutter, priced for near bankruptcy, and seems like inevitably heading to zero based on the chart. So sentiment was about as bad as it could be. Because of that, the pendulum is just so far on the bearish side, leaving people susceptible to being caught off sides by a bullish catalyst. Sure enough, on August 30th, the DHS, Department of Health and Health Services, oh God, I have no idea, recommended to the DEA, Department Drug Enforcement Agency, I don't know, to reclassify marijuana as a Schedule 3 drug down from a Schedule 1 controlled substance. So that is huge, huge, huge news. This is a news headline, which again, much like the Bitcoin one, passes what I call my CNBC heuristic. Again, I'm going to do a private video diving deeper into this, but essentially the CNBC heuristic is, does this headline seem like so big of a deal that it's big enough to be talked about on CNBC and just repeated across all the news sources? That tends to really create a big feedback loop of that news circulating and people getting involved with the stock. So if so, then I really want to likely size this headline up. I want to favor holding longer and staying with the trade more than normal and having a little bit more faith overall. That doesn't mean I want to fight the chart. It doesn't mean anything crazy like that. It just means this headline has more potential than your everyday news headline. So when you take a headline like that, coupled with the extremely beaten down long-term chart, this move could really have legs to it. So intraday, if you can get any prints in that first bar all the way to the limit up, I think those are just exceptional, amazing EV prints. The probability on this gaining major momentum as that headline gets distributed is so huge to me. Sure enough, this makes a big, beautiful leg, and the same traditional stop of prior bar lows ends up working perfectly here. One thing I want to also discuss is how you can approach this type of headline from a swing trader perspective. Again, given the daily chart and how beat down this is, I think it's totally reasonable to swing this kind of trade, getting long as soon as you can and then using a daily stop of prior bar lows. Another huge tell on this trade, by the way, is the incredible volume we ended up doing on day one. Now, keep in mind, this headline came out towards the end of the day, so we really did some record all-time volume on this stuff. And so while I'm using MSOS, which is just the weed ETF, obviously you could be trading any weed stock as a secondary on this headline as well. And so the concept remains the same, and this ended up working exceptionally well as a swing and as an intraday opportunity. So now the final ticker, and the one I wanted to spend a bit more time on as well, viewing this as probably the biggest opportunity of the month. So VFS was a pretty bullshitty IPO that was trading all over the place. Kind of the same low float broken ticker that had over a $20 range on day one, then started to pair off towards the teens. Kind of similar to the SPGC that we had already covered. And so this ticker had been holding prior bar lows on the daily when we end up turning higher and break prior bar highs around 20 bucks on the daily. So this started a multi-day momentum move that ended up really mega squeezing higher given the low float. So the first opportunity came on that August 22nd intraday. By midday, we had already traded up almost 100% higher. This is clearly a high volume, high momentum day. Classic stair step pattern where we make a small move higher, consolidate a little across, small move higher, and repeat. None of the prior consolidations were long enough to get me too excited, but then we finally midday have an hour-long tight consolidation between 11 a.m. and noon. So $34 were the highs from earlier. We break those highs as an entry on that resistance break, and then we're just off to the races again with the same old stop. So what ends up happening is we then go parabolic towards 47. While my traditional rule is to wait for the prior bar lows to break, the exception to that rule is if we go parabolic. Given the extension of that bar, how far we are over the upper Bollinger Band, and the immense volume that got done there, I think it is totally sensible to be selling into that spike, potentially even shorting if you're super experienced, or otherwise just hitting out at break of prior bar lows. This was a really tight setup in a stock that could really squeeze given the float. Just textbook risk-defined long entry with huge asymmetry here on that long side. Finally now, I want to discuss this from a swing perspective as well as that top day. So we hold prior bar lows on the whole way up on the daily chart and then start to really capitulate with a big gap in the 80s. I had a very strong feeling this was going to be the top that day. Why? First, we're 5 big up days in a row now. We've gone up about 5x in as many days, and now we're really gapping up on massive volume. But there is one other key factor that I would consider a very advanced factor that most people miss, and I think is the whole reason why this thing toppled. So VFS on August 28th, the day of the top, finally became eligible for options trading. You might even recall that I tweeted about this the day of the top. There were some silly options prints going off. This is normally interesting to me when stocks can first trade options, but here it is extra important. I can't stress those extras enough. Why does it matter? So first of all, VFS has an extremely low float and borrow is hard to come by. The borrow rate was extremely expensive and you worry about getting force covered. However, now with options, this allows for synthetic shorting. Not only can you buy puts as short exposure, but you can also sell an infinite number of calls. Obviously extremely dangerous, but there's nothing that kind of limits you like borrow and short availability. So allowing this synthetic trading tends to really tighten the market, in my opinion, and add a lot of liquidity for market participants to express that short side. Normally that's interesting, but this is where the situation gets extra interesting. VFS happens to have warrants, VFS dub, and these warrants have an exercise price of $11.50. So why the hell weren't the warrants trading much higher? Well, that's because they weren't exercisable yet. And so this is very common where the warrants trade at a huge discount because the market knows that by the time the warrants can be exercised, the stock will be much lower. Except this is the key missing link now. The time component of the options market allows you to complete the arbitrage. If you short the equity, you can't be sure you won't be force covered or that the short won't go to infinity. But by selling puts, you can close that arb, and the meat on the bone, considering the warrants were trading at $8, it is huge reward out there. So in my opinion, it's those dynamics that led to the huge amount of gravity on the VFS underlying, which led to it absolutely melting over the next week. So as for the swing now, VFS the next day after that top breaks prior bar lows, and this is where it is game on backside. So borrow does continue to be a bit expensive, but if you don't want to deal with the overnight, you can still be shorting pops and rips intraday against prior day highs to catch the intraday melts that were occurring. So often these tickers can melt as fast as they spike, and people greatly underestimate how quick and far this can unravel, especially in light of the warrants. The stop of prior day highs incredibly takes you all the way back into the teens. What a chop. So VFS, because of that dynamic with the options and how much meat was on the backside, that backside fader is what I view the biggest op of the month. Definitely not the easiest. I think this trade was exceptionally complex. I think it is not without risk. I think it's really difficult. It's complicated. It's scary in real time. This trade was for experienced pros only, I think, and far harder than many of the other ops I've discussed today, but not crazy here to make 6 figures in that short. No good handful of people did. So this was probably the biggest op. And so woo boy, this was a long one, but those were all the top ops, at least in my view. Of course, many ways to skin a cat, many different things out there that I probably never even see. And boy, it really takes a while to go through these videos and make these things. Even when I would say this isn't really some well-polished, professionally produced offering. But I hope to keep on improving from here and stepping up my game. Thank you all for the support and more cool concept videos to come.